Hey everyone, happy Sunday. Welcome to episode number 7 of My Money Method. I'm your host, Swing Pony, and we have an awesome show ahead with MasiTrades. So stay tuned and we'll get her out here in just a bit. Hey guys, hope everyone is doing well. We have an awesome show ahead with MasiTrades. She's a super experienced trader. She has an awesome YouTube channel. I've personally recently started tinkering with options, and the way that she's able to break down all of the really complex things in a way that beginners can understand is just A+. So excited to have her on, but we're going to talk about a lot of things that aren't options related as well. So there's a lot of fresh insights and wisdom that we can pick up from her. So stay tuned and we'll have her out in just a few minutes. If you are tuned in right now, go ahead and hit the like button for us and let's rock and roll. I do want to talk about the IWM. I'm personally a small caps trader. I love swinging small caps. And I will tell you, it has been a tricky year ever since February. If you look over here, we've really been trading. We've been trading sideways for a while now. We had a really nice steady growth where a lot of the plays rallied, and then we've just been doing this up and down. And a lot of our plays, haven't been sustaining their gains. So it's been a little bit tricky, but we did kind of hit the bottom of that range just now and see a little bit of a bounce. So I personally would love to see a little bit of a small caps rally again. So I am staying tuned for that this week, and we'll see if we can finally get it. I do want to talk about one of the plays that I've been watching. I've been a little bit delicate with my swings just because it's been a really big scalpers market. Like I said, a lot of trades don't seem to hold their gains for that long. But one of the plays that I am really interested in right now is actually any. And this is a crypto mining play. I don't know if you guys are Bitcoin, crypto traders, but we have been heating up quite a bit. And this is actually a carbon-free mining play. So any is doing a merger with Griffin Mining, and I'm actually going to pull up some of their background info so you guys can get a taste. They have a merger coming up in, I think, Q3 or Q4 with Griffin Mining, which is all about carbon-free, renewable energy Bitcoin mining. And as you know, that's a very hot commodity right now because there have been some complaints and some concern about how energy efficient crypto is, especially Bitcoin and Ethereum. And what I actually really like about this stock is the managing team. So if you look, we actually have a CEO that's from Riot, and we also have the former CEO of Riot as the CTO with Any. So this is a play that I definitely am keeping an eye on. If you want more info on the stock, this is a great thread from @SteelTrading. Go give him a follow. Go check it out. But going back to the chart over here, I do want to show you guys kind of where I added on Any. We did get that little gap fill down here to the bottom. So right around this 350 range is where I added last week on Thursday. And then as Bitcoin started heating up, we did get that really beautiful bounce right there. So I'm going to keep an eye on that, especially as we almost hit Bitcoin 50K this week. So, it's nice to see crypto weekends are a thing again, and Any at this price, if you've been a fan of Mara, if you've been a fan of Riot, I really like this play. Moving on, I want to talk about my exit strategy a little bit. Like I told you guys, I don't know if you guys are mostly swing traders. I don't know if you're scalpers, but swing trading has been really tricky in this market. And one of the things that has really helped preserve my account is staying very, very strict with my exit strategies. If you're tuned in, if you're in the comments section, let me know. Do you stick to your exit strategy? Do you respect it? Do you follow the plan? Or do you end up kind of negotiating with yourself when you hit a point you're like, I need to exit. Oh, but let me just see what happens. I think a lot of times a scalp or swing trade or day trade can end up being a long-term play for a lot of us, aka bag holding. And that's never pretty. It's a great way to damage an account. My goal is always, if I go in with the intention of a short-term trade, I don't want to end up having it turn into a long-term one just because I didn't want to cut losses. And I actually really, really love this tweet from The Rock Trading, who was a guest not too long ago on the show. And he said, a loss never bothers me after I take it, but being wrong and not taking a loss, that's what does damage to the account and the soul. And I 100% agree. Yeah, negotiating and getting screwed. Don't negotiate your exits. If you have a plan, stick to it. And I want to talk to you guys actually about my plan, because I don't like doing a strict stop loss, because we have some days where everything goes red at once. You know, SPY goes down, IWM goes down, and then sometimes the next day you have a beautiful green bounce. So I don't like being stopped out of my positions by having a stop loss in place. What I actually like to do is I like to define a floor on my stock. This is funny, Blade Man. There's always a better, stronger level of support just below. That's called negotiating your exit. But what I like to do is I like to have a distinct floor in place, and that could be, you know, a strong moving average, it could be a trend line, a strong area of support. And it's totally subjective. Like what I might think is my exit doesn't have to be yours. Our entries vary. But my plan is if my stock closes below that floor 2 days in a row, I'm out. I exit the trade. And this is one of the best things that I actually learned from Radio Silent Play. And I want to show you how this comes into play, because there's actually a few trades that I exited this past week. And I want to show you what a difference this makes. So let's start with BNGO. So this stock right here, I actually had my exit. Let me pull it up. Well, actually, let's start with SNMP. So SNMP is really great infrastructure play. You know, we talk about the IWM and we talk about small caps not really holding their gains, but this, you know, climbed that AMA beautifully. And I kept my floor, the 8 MA on this stock, which you can see is right there. So we had a first day close under the 8 MA. We had a second day close under the 8-day MA. So what that says to me is 2 closes, I'm going to get out because balance of probabilities leans that we're going to go lower. So because I exited here, I was able to minimize my losses when it continued to bleed out quite substantially. So we went from here where we closed at, you know, $1.44, and look what we're trading at right now, 91 cents. So this is my absolute go-to strategy. It's just a balance of probabilities. It's never guaranteed. Some days you're going to exit, and the next day the stock's going to rally. That's just how it is. But if I want to preserve my account, I want to make sure that, you know, I have a plan that's working the majority of times. So I also want to pull up AESC, which is another one. I picked 197 in my subjective floor because that was the 50-day MA on the weekly chart. And over here, you can see we had that first day close, second day close at about 191, which is when I would have exited. And then we're at 180 right now. So 2 closes below, get out of the trade. That's my go-to strategy. I'm going to show you one more just as an example over here. So BNGO, I actually ended up doing the 200-day MA on this one, which let me add that in real quick so I can show you guys. BNGO. Okay, so on this one, I use the 200-day moving average as my floor. I'm going to add that in real quick and show you. Change that to the 200. All right. So right here, we've got a 200-day moving average that I had as my floor. We closed below it day one. That was day one. Day two, and our close was at about 569, and right now we're at 539. So again, it's just a balance of probabilities. This is a really great way to just mitigate your losses and make sure they don't turn into bags, because I know we don't like that. Trent, yes, I actually thought about you because you asked me about TTOO on the last show, and I said yes, as long as it holds that $1 range, then we're going to hang tight and we're going to continue to ride the waves of that stock. But it broke that support, and you did the right thing, because you know, if it continues to go down lower, what's the point? You know, you can always exit the trade and you can re-enter instead of ending up, you know, bag holding a bunch of stocks. We don't like that term, so we're going to just minimize our losses, move forward. There's always another trade. So I did want to talk to you guys about that, because the exit strategy for me personally has been an absolute game changer, especially in the spunky market. So all of that said, I do want to transition over to bringing Mossy on. Like I said, she is primarily an options trader, but she's done a really great job of simplifying a lot of that terminology, and also I think has a lot of knowledge and data about trading in general and her experience that is really relevant outside of options. So if you're tuned in, we're going to discuss, you know, her background as a trader, what that transition was like going full time, some of the things she learned managing a smaller account versus going bigger. We are going to discuss current market sentiment, because we know August, September, you know, they're kind of slower months. Everybody's a little concerned about what that's going to look like. And then we're going to dive into some of the basics of options, some of the key things to look for, key things to know, top 3 stocks going into Monday, and then we're going to wrap up with a Q&A. So if you're tuned in the chat, go ahead and, you know, send us some questions along the way. We'll definitely have time for them at the end. With that said, I want to go ahead and welcome MasiTrades.
Hi.
Hello.
Hi, guys.
Welcome.
How's everyone doing tonight?
Good. Thank you for coming on. You know, one of my favorite parts about doing the show is actually researching the guests beforehand, because it's fascinating, like how much I can actually learn throughout that process. And I just think your YouTube videos are like phenomenal in terms of taking some very, very complex ideas, especially in the world of options, and simplifying them. So I absolutely love that.
Thank you.
I do want to get started by talking a little bit about your trading background and your trading journey.
Okay, so I started trading, I want to say, in May of 2018. I wasn't actively trading. It was just kind of getting my feet wet into investing equities. So, you know, when you first start trading and people are like, oh, buy the stock, buy shares, buy do this. That was kind of what I was doing to get started and I really didn't know what I was doing. It was just like someone told me to buy a stock. So I just did that. And I feel like that's how a lot of people get, like, yeah. So then from then I just kind of did more research and I just started trading more actively, day trading more actively, but it was just strictly equity. So I wasn't in options or anything. So I was trading that for about 1.5 years. And I didn't do so well, like any beginner trader. I didn't have beginner's luck, nothing. I was not doing well at all.
Unless you traded this past year, because that was a different beast, right?
Yeah.
And everything was going up.
Exactly. But yeah, I was just not doing well. I was not getting it. And I think it was because just I really didn't take the time to get past that learning curve, which I feel like a lot of traders try to skip over. And like the one thing that I always tell anyone that asks me, you know, is don't try to skip the learning curve, because if you want to be a trader long term, or, you know, have this as a career, that's the only way that you're going to be able to do it. Because short term, yeah, you know, you can catch last year's market or the market, in the beginning of this year, which was so easy to trade and people were making money like out of nowhere. You could just like pull money out of the market any day of the week. Whereas now, if you don't understand that learning curve, or if you haven't given yourself the chance to learn and kind of assess different market situations and different market sentiment, it's really hard for you to adjust and change your strategies and be able to adapt with the market.
Mhm.
So then from there, one of my friends introduced me to options, and it really intrigued me because at that point I didn't have like a huge account. It was a smaller account, it was under 10K. So obviously with options, you don't have to invest as much equity in order to get the same ROI, if not more. So I was really, really interested. I started learning about options, and I caught onto options really, really quickly. It was so much different than equities, and it was just something that just clicked for me. And I just started trading options, I want to say 2 years ago. And ever since then, that's what I've been
That's
doing.
your
I would swing
jam.
trade. Yeah, swing trade. Now mostly just scalping options. Obviously, it changes from different market sentiment as the year goes on, and what
Mhm.
I'm able to, just like you were saying earlier, I was listening to you as well. You're more strict with your swing trades, and I'm not a swing trader as often, but I do like to swing trade. But even with this market right now, it's a scalper's market right now. So that's what I've been kind of doing, and just you know, it's been going well.
Yeah, I like what you mentioned about options because I'm very, very new to options. It was something that I always found to be really overwhelming because as you start to learn about them, you have the Greeks, you have the strike prices, you have the expiration dates. There's so many different moving parts that I think if you try to like learn all of it, it becomes very overwhelming to the point where you almost like don't want to touch it. And I
Yeah.
think a lot of traders kind of feel that hesitation. But what I did personally was I started, researching, watching some videos, and accepting like I'm not going to get it all by just
Yeah.
absorbing the knowledge. Like I'm going to get it by tinkering and like playing with I don't care money or paper trading for some and
Yeah.
seeing how that works out. And what you mentioned has been the first thing that I noticed is that you can put substantially less capital forward with options and
Hmm.
see way greater return,
Hmm.
especially in the style of market that we've seen lately with like with equities, with small caps and
Yeah.
all that. Where if you
Hmm.
get a 10% gain, that's substantial in this
Yeah.
market. With
Yeah.
options, you're like 30%, 40%,
Yeah.
100%.
10% is just like, okay, that's not good enough.
It's insane. It's
Yeah.
insane. So I'm definitely been interested in learning more about them, and I love all of the information that you provide. I do have a question for you. How long have you been trading full time? Did you work like an office job before this? Did you have a transitional period?
Yeah, so I went to school and I have a degree in technology. So I worked corporate, I want to say for 3 years, and I'm just someone that's a lot of people can like vouch for this, and just corporate life was not for me. It's just I don't like the person that corporate turns you into sometimes. So I was just kind of looking for a way out. I tried a lot of different things, and I guess like my path was into options and trading. And I want to say I left my job in January of last year. So it hasn't actually been
Okay.
that long where I haven't worked like a corporate job. It's been like a year and a half. And that transition was actually tougher than I had expected, because when you have a steady income and you're trading, it's way different than not having a steady income in trading. Emotionally and mentally, it's super, super exhausting. And I think that's what a lot of people don't understand. And I didn't have anyone like all the traders that I knew were trading full time. None of them had like corporate jobs like that, or they were in school, they were kids that were in school. And I didn't have anyone to kind of give me that advice. And if like
What
the
that
biggest,
transition would be like?
yeah, exactly, that it's not as easy as you think, no matter how steady your trading is, or like how much you have in your account, how much you have saved up. At the end of the day, that now becomes your main source of income. And when you're pressured into having to make money, it makes it a lot harder. And I struggled for like the first 3 months out of my job. Even though like I was still like making money, mentally it was a lot harder for me to trade. And that's one piece of advice that I give like everyone that asks me, like, I want to become a full-time trader, what should I do? Don't leave your job. You can trade any day of the week and, change up your schedule to incorporate trading into it, but I wouldn't leave your job unless you are have at least like a year's worth of salary and you
Okay.
know that this is something that you mentally can get into prior to taking that step, because it is a big step.
So that's really great insight, because I even conducted a little poll on Twitter the other day that was, if you have a full-time job, what is your end goal? Are you just trading for a little bit of like a side hustle, a little extra income to work less hours, or are you trying to eventually become a full-time trader?
Yeah.
And 50% of people said that their end goal is to become a full-time trader.
Yeah.
And, it definitely is, a question of like, at what point is it a good idea to take that plunge? Because, like you said, it's sort of a different beast when you're funding your trading account
Yep.
through your full time job. But if your trading account becomes your make or break, I now depend on this for rent, I now
Yeah.
depend on this for dinner, it's a different beast.
Exactly.
So,
Yeah.
so your advice would be make sure you've got a year taken care of.
Yeah, and I think with social media and trading on social media, it's kind of shown people that you can either trade or have a 9 to 5 job, and that's not the case at all. You can do both 110%. I've seen so many people do it, and if you really don't think that you can leave your job, or you really don't aren't even if you are really good at trading and you have steady income coming in from trading, but you like your job, you can do both. I hate this thing of you can only either work or you can trade. You can do both, you can do whatever you want, and it's not hard. I've done it before. I know people that are currently doing it, especially if you're day trading or scalping. Swing trading, you don't have to watch all of your trades at all the time.
Mhm.
You have alerts. There's just so many different ways that you can implement both and anything else you do in life. So I definitely like push that a lot. Like, you don't have to pick one or the other. You don't have to pick school or trading. I know a lot of traders also say, there are a lot of traders that are dropouts, and they did really well dropping out of school and becoming traders, which is amazing. That's great. But if you don't have to do that in order to become a good trader.
Yeah, I think that's a great insight, because a lot of people do get frustrated. How can I dedicate my time and my focus to trading if I have a full time job? And there is some gray area in between. You can try to manage both first until you make sure this is absolutely the path I want to go, and really make sure that you're set up for it before taking the plunge.
Yep, exactly.
In terms of your trading progression, because I know you mentioned like at first you blew up a couple accounts, every natural trader's story. But now you've gotten better and you're trading full time. What were the differences for you in terms of managing a smaller account versus now having a bigger account? Did your strategy change at all? Did your risk management change? What varied as your account size grew?
So I've gone through so many phases. This is like such a good question, because in the past 4 years, I've gone through so many phases with different account sizes and how I've approached them. So when I first started, I did blow through 2 accounts, and then on my third account was very, very stingy, and I had really tight risk management, and that was how I was able to grow that account. And then once I was very steady, and I grew that account to a certain extent. Um, I got a little confident, which every trader does, and I started to increase my size and increase my exposure, which is fine because I was doing well with it. But what I didn't realize that, I was trading with like 30, 40, 50 contracts. And when you're trading very quickly with that much money, you don't realize it right then and there, but you do realize how it affects you later in the day or in the week or in the month, and how it affects how you approach different things. It's very mentally draining to trade with a lot of exposure on the table. And that's what a lot of people don't understand either. So from there, I realized that, putting up so much risk, I don't need to do it, because it's not necessary for me to make that much money in one given day. That was never my goal as a trader.
Sure.
And then from there, now I'm at a point where I have a steady amount that I go in with, either 5, 10, 15 contracts, and I don't go over that. And that's only because mentally for me it was draining to do that. and it's exhausting. So I didn't want trading to become something that I disliked, and it was becoming something I disliked. So in the 4 years that I've been trading, there's been multiple phases of how I kind of increase my risk and decrease my risk. Obviously, it's also dependent on overall market and how the market, if it's giving me opportunities, obviously, if the market is giving me a lot of opportunities, I'm going to increase my risk. If it's not, you want to be a lot more stringent in what you put out to the market, because obviously, it can take it very quickly.
Yeah, well, and I like that you touched on, your first thing wasn't talking about how your like technical strategy changed. It was talking about like my mental capital was
Yeah.
going down, because that's
Yeah.
something that we often, I think, gloss over or try to ignore. If you're not in the right mental state, or if it's affecting other areas of your life, then
Yeah.
that's a necessary shift too.
Exactly. And I've also noticed that it's a lot harder to grow a smaller account. So whenever anyone asks me, how much money do you think I should start with? You should always start with the least amount of money that you are willing to risk, because it's so much harder to grow a small account. And I know this because I have a decent sized account now, and I've always had like a more decent sized account ever since I've started trading options. And
Mhm.
I tried to trade a smaller account, and it's so much harder trading on a smaller account than it is on a bigger account. I didn't realize how hard it was. And if you can grow a small account, you can 100% grow a big account, but you can't do it vice versa. And that's what I
Right.
learned.
Right. Because I think, a lot of people do think they need a ton of capital to get started, and it can help.
Yeah.
Of course it can help, but the discipline that comes with having to manage a smaller account, you can give somebody 20 grand to start an account, but if they don't know how to manage 2 grand or
Yeah.
$200,
Hmm.
the 20 grand is going to go downhill just as fast.
Exactly. And that goes with anything, any
Mhm.
finances that you have. If you can't, you know, financially take care of 20 grand, you can't 2 grand. If you can't live off 5 grand, you're not going to be able to live off 10 grand. It's really all mental, and how you kind of strategize your account and be able to learn. And you touched on discipline, which is huge in trading. So if you're disciplined enough to grow a $2,000 account, $20,000 account is going to be easy.
You're going to be set up for success.
Yeah, exactly.
Yeah. Um, so question, I know August, there was a lot of doom and gloom surrounding August as,
Mhm.
a slower month, less volume. Historically, a lot of big traders sit this one out, and even
Mhm.
September being a little bit red and questionable until we get into, the fall and winter seasons. What, um, what is your, what is your insight right now on the current market sentiment? Like, how are you approaching the seasonality of it?
So I've noticed that obviously the past I want to say like 2 months, it's been hard to trade. I've taken more losses in the past 2 months than I have this entire year. And I've realized, and I think sometimes you don't realize until you take like a week's worth of losses or 2 weeks worth of losses, where you're just like, okay, I need to change my strategy. I need to adapt to what
Mhm.
the market is telling me. And recently, like I said, and you mentioned this too, it is a scalper's market. It's really hard to swing trade because everything is in a range, even though, the NASDAQ and S&P are all-time highs, and touching all-time highs is just everything's already priced into stocks, and investors are still
Mhm.
uneasy with where the market could go and where different companies could go, because even with earnings coming out, and I love trading earnings season. I think it's like so much opportunity, but this earnings season, quarter 3 and quarter 2, really showed me that, investors are not buying it. And when they're not buying it, it's really hard for you to optimize and kind of be able to catch those moves, because there's no moves happening. So that's it is a struggle. And I'm not going to sit here and be like, oh, I've done this and this and this to like become better or make money. I still like, it's very hard to take money from the market right now. I've been very, very, my risk management has tightened a lot. So I only scalp. If I do take a swing trade, it's a swing trade that's 1 or 2 days. It's not a long-term swing trade. I make sure that the stock has catalyst behind it. There's a lot of things that I kind of was lenient on in my rules, which now have really tightened up over the past 2 months. And I make sure that I follow very strictly to my rules and my strategy and be able to update it. So right now, I'm mostly just scalping, and it's very, very quick scalps. I want to say like 2 to 3 minutes, 5 minutes max. So
I like that it's very endearing to hear somebody who is a more seasoned trader, somebody who's been doing this for years, to say, yeah, over the last couple weeks, last couple months, I've taken some really big hits. And
yeah,
that even me as an experienced trader has had to really make some changes.
yeah,
Because I think a lot of newer traders sometimes think, oh man, it's just me. Like, I don't know what the hell I'm doing. I suck at
yeah.
this. I'm not good at this. But everyone goes through it, right?
Yeah, yeah, 100%. And it's not, and I always tell, any one of my students or anyone that asks me questions, I'm struggling right now, I'm struggling right now. And it's not just the entire market. There's so many day traders, so many, and a lot of people don't put it out there. And because, there's the stigma of taking losses as an experienced trader, but the market is unpredictable. I'm not going to be able to tell what the market's going to do in the future. I can just, based off of technical analysis, based off of fundamentals, based off of research that I've done, it can make an informed opinion on what it can or cannot do. And that's what all of us are doing. Doesn't mean that I'm going to be right 100% of the time, because obviously the market is unpredictable, and we're just trying to optimize on what we can get from it.
And anyone who claims they're right 100% of the time
Is not telling you the truth.
probably not being 100% truthful.
Run away.
Run away. We do not trust that person. You know, there has been a lot of also talk, and you said earnings season hasn't quite been the same. Traders aren't taking those trades, and maybe there's a little bit of that fear in the market with everyone constantly trying to guess the top.
Mm-hmm.
How are you navigating that? Do you have any like hedges in mind in case we do see like a massive pullback? What are your thoughts there?
So not necessarily. I'm more someone that I'm going to play what I see and what the market is telling me in that moment, in that week or 2 weeks, 3 weeks. I don't try to think more than probably a month's ahead. I do think that we are due for a market correction um, into the end of the year. That's just my opinion on it, based
Mm-hmm.
off of a lot of different economic factors. However, that may or may not happen. That's just what I personally believe. But it doesn't mean that I'm gonna go buy SPY puts, or go, put my whole account into puts of any kind. I'm just gonna play it how I see it. So if it does present to me, the market is correcting, and it does present opportunities for me to be able to, you know, grab on puts, or find a bottom or find a top, and be able to I don't know what word I'm looking for. uh I don't know, I'll think of the word, but
Okay.
just be able to kind of see that and take that opportunity. That's what I'm looking for. Take the
Yeah.
opportunity of taking that trade. That's how I look at it. I don't like to look too far in advance, because then I feel like you psych yourself out. You give
Uh-huh.
yourself this, this is what's going to happen. This is what I think is going to happen. And then it doesn't happen, and you psych yourself out, and now you don't know what to do. So I give myself multiple different, outcomes, and whatever the market shows me, or whatever outcome the market is leaning towards, that is what I'm going to lean towards as well.
So more of a trade what you see, not what you think.
Exactly. Mm-hmm.
Well, let's move on a little bit towards options. Like I said, I have recently started tinkering with them, and there's so many different factors between strike prices, expiration, all the Greeks. But in terms of strike prices, how do you go about, choosing the right one?
Okay.
Do you have any
So
best practices?
yeah, we can definitely go through that. I think strike prices is a very, very key factor to how your options play, pays out, or how the outcome comes out. And I don't think a lot of people understand strike prices. So if I can share my screen, I can show you guys
Sure.
on the platform. Can you guys see it now?
Mhm.
Okay. So I'm just going to show you the options chain here. So strike prices, these are your strike prices right here. So this is the options chain for NVIDIA. For anyone that doesn't know, this is the Thinkorswim platform. This is the options chain for NVIDIA, and these are NVIDIA strike prices expiring this coming week, August 27th. So your there's three types of strike prices. You have your at the money strike prices, your in the money, and your out of the money strike prices. Your at the money strike prices are usually 50 cents to $1 within the actual price of the stock. So, for example, Nvidia is trading, or the last price that it was trading at was around 208.16. So, your at the money strike prices are going to be the 208.75 and the 207.50. So, those are going to be your at the money strike prices. And I only have 10 showing. You can show more if you want. You can show all of them. I usually only have 10 showing at a time just to make it easier for me because I don't usually buy too far out of the money anyways. So your 207, 208.75 are going to be your at the money strike prices. These strike prices are going to be a little bit more expensive, but they're going to be the safer place to take. They're not going to be as high risk as trading out of the money strike prices. So your out of the money strike prices on the call side are going to be anything greater than what the stock is currently trading at. Okay. So if the stock is trading at 208 right now, anything greater, any strike price greater than 208 or within that dollar range is going to be your out of the money. So your 210, 212, 215, 240, et cetera, et cetera.
So
You're in the
somebody's asking right now, just to reiterate, what is out of the money? Out of the money on a call is a price that is higher than what it's currently trading at, correct?
Yes. Out of the money is what you anticipate the stock, the strike price that you anticipate the stock could potentially hit at on the upside.
Got it.
Okay. And then your in the money is the opposite. So it's what the strike prices that the stock has already hit. So it's going to be less than on the call side, it's going to be less than what the stock is currently trading at. So your in the money is going to be, the 205, 202, 200 because the stock has already hit those price points on the call side.
Right.
And then on the put side, it's just inversed. So same at the money prices, though. Your at the monies are going to be the same for your call and put side. Your out of the money puts are going to be price points because on the put side, we're looking for the downside. So your out of the money strike price is going to be anything lower than what the stock is currently at. So anything lower than 208 and the 207.50 here I consider at the money. So 206, 205, all of these are going to be out of the money puts. And on the opposite hand, anything greater than what the stock is currently at is going to be your in the money puts. I did that opposite. I'm sorry. Anything greater than is going to be out of the money. Anything less than is going to be in the money.
And it sounds, for somebody who's new to options, all of this is like, wait, what? There's so much going on. It's so confusing. But, I'll tell you what, that was my biggest thing. Is as soon as I tried to start learning options, I was so overwhelmed by it. I just wanted to take a step back. But that's why what I did was I started tinkering with I don't care money. Because you can play, you can buy a single contract depending on the play for money that's, for a price that's not so substantial. And just getting an idea of how things move in the different moving parts. If you want a paper trade too, that's definitely an option. But for me, listening to all of these videos on options was so overwhelming. But I took what we're discussing right now, the strike prices. Okay, I'm starting to get an understanding of that. Let me put it into the real world and let me put a little bit of my money out there and actually learn a bit that way. And that's been super helpful for me.
Yeah. And that's the best way to learn is through trial and error, whether you're paper trading, whether you're back testing a strategy. I think with options, it really is trial and error. You really just need to go out there. And if you're not comfortable with putting up real money, try a paper account. And really, that's how you're going to learn the ins and outs of options trading is if you actually do it. If you're just, I sit here and tell you this, and this, and you don't apply it, you're really never going to learn because the basics, that's just how you learn the basics, in my opinion.
100% agree with you. 100%.
Yeah, so with the strike prices, so like I said, I usually only have 10 or like 14 depending on what I want to see. I don't usually trade, so I stated that the at the money is going to be the most expensive strike price, are it's going to be more expensive than your out of the money. However, it's going to be the safest play for you to take. Your out of the money strike prices, and you can see here, so this is the price of the one contract here. This is the asking price for one contract. Say for the 208.75, which is our at the money, is $4.10. And then let's say our 215 is $1.83. Yes, this 410 is more expensive. However, it's going to be the safest play to take on the same week expiration. The further out of the money you buy your contracts, because of volatility in the Greeks, which is a lot in-depth stuff that I'm not going to get into right now.
Yeah.
There's a lot of factors that go into it. The further out of the money you pick your strike price, unless it's a swing trade, you are putting on more risk, even though it's less capital. So if you are going to select out of the money strike prices, this is how I usually select my strike prices if I'm day trading or swing trading. And you can see I have the volume and open interest on the strike prices open here. If you are going to select an out of the money strike price, I would select a strike price with the highest open interest and volume. That to me, this is a kind of a strategy that I utilize, signifies that people are buying those contracts because they think that stock is going to hit that specific price point. There is 9,000, open contracts on the 220 strike on Nvidia for August 27th. To me, compared to the other strikes around it, that is an anomaly. So that to me shows that people are watching Nvidia to potentially hit the 220 mark, and even the 210 mark. You can see the 210 also has a lot of open interest, and even into next week, if you move down, you can see 210, 220, 215. Those psych level strikes are going to have the most open interest and volume
So volume and open interest, two things to keep an eye on
when you're determining strike price. Yes.
Now, when you say out of the money, a lot of times that can be like the lotto calls, right? That people will
Mm-hmm.
do.
Yeah.
And how often do you ever go for those? Because I know some of the returns have just been like when and if it works out, which isn't all the time by any means, but some of those percentages are just like insane.
Insane, yeah. I do sometimes select out of the money strikes when I'm swing trading or day trading, but it's not too far out of the money. So if I was to
Mhm.
trade, for example, Nvidia, and I wanted to select an out of the money strike, say for 2 weeks out, I would either pick the 220, 210 call. Most likely, if I'm swinging it, it would be the 220 call because it does have a significant amount of open interest and volume, and it is a psychological level. Any whole number level that the stock could potentially hit. Usually you'll see those as psych levels because investors tend to push the stock to those specific levels. So I do select out of the money, but when I'm scalping, I'm 90% of the time when I'm scalping, I'm selecting out of the money or in the money strike prices. It's usually
Mhm.
never out of the money. Out of the money, I usually only trade if I'm day trading or swing trading the stock.
And I do want to, real quick before we jump into your three stocks going into the Monday, and I do want to get to a Q&A as well. So in the group
Mhm.
chat, if you're tuned in, start putting out some questions. We're going to get to them here in just a few minutes. Do you play earnings on options? I know a lot of people say like that is one big 50-50 gamble. It could go either way. What's your thought process there?
I'll just give you guys an example. I traded in the 4 years or 2 years that I've traded options. I've played earnings 3 times, and all 3 times I took a loss. Every single time that I traded earnings, I took a loss, and they weren't small losses, they were all big losses. And on that 3rd time, I promised myself I would never trade earnings again because what the problem is, volatility is so high during earnings when the stock is reporting its earnings that week. Its volatility is so high, its IV is so high, and you'll notice it compared to IV implied volatility any other week as compared to the week of its earnings. One, you don't know what's going to happen. The stock could absolutely crush their earnings, and investors still don't think that they either think it's already priced in or it's not worth the price that it's at, and the stock will drop. And we've seen that happen multiple times in this quarter with a lot of earnings, and vice versa. So with that, because of the fluctuation of the stock, if it moves up 20 points and then drops another 20 points, because IV is so high, your premium is going to get crushed unless you have like a 2-month expiration. Your premium is going to get crushed by that IV, and it's going to be very difficult for you to make up the premium price. So I've always just seen this, and it has happened to me. I'm not talking, just to talk. I've experienced it, and every time I've played earnings, I've ended up taking a loss. So I don't recommend playing through earnings. However, I
Leading
do
up, maybe?
leading up, exactly. So leading up and afterwards, because of the implied volatility, your premiums do move a lot more, so you end up making a lot more ROI because of the IB on the stock. And then afterwards, you can assess, a week, 2 weeks after the stock has reported earnings. I like to play it too because it still has a little bit of volatility behind because of its earnings.
Sure. I like that. I know earnings are definitely a sensitive subject for a lot of
Yeah.
people. And I'll hold my regular comments through a swing trade, and people are like, "Oh, you're holding through earnings," but
Yeah.
it definitely works both in terms of equities and options. Even more volatile in options, it seems like.
Yeah. Yeah.
I do want to move on to your top 3 stocks going into Monday, but real quick before we get to that, what is your process in terms of coming up with a routine watch list? What are just a few things that you look for?
So the first thing that I always look for is a catalyst. My watch list is usually based more off of catalyst and technical analysis. So any fundamental changes, any news on the stock, price target increases, decreases, all of that supersedes anything that the chart is showing me, in my opinion, because that's just how I've always traded. Because the catalyst gives the stock momentum, especially if you're day trading or scalping. So I always look for catalysts. There's a bunch of sources you can Benzinga Pro, CNBC. They always tell you if the stock has any news. Thinkorswim has news. So I always look for news first. And then from there, once I have a watch list of stocks that have news behind them, I will then use that watch list and look at the technicals and look at the chart and see what stocks are presenting the best plays. And I'll take those ones.
Got it. So you start with the news, the catalyst, the fundamentals, and then you go secondary and look at the chart and see what makes sense and could potentially see a move.
Yep, exactly. Mm-hmm.
I like that. I like that. Let's take just a few minutes and go through your top 3 stocks going into Monday, and then we are going to wrap up with a few questions from the chat. So y'all go ahead and send those questions through, and we'll get to them here in just a moment.
All right. So, and you guys can see my screen, right?
Yep, we got it.
Okay, perfect. So we were just on NVIDIA's options chain. So I'm just going to show you the chart because this is a big watch for me on this entire week. NVIDIA looks really good. So I'm on the daily time frame right now. Whenever I look on Sundays for the stocks that I could potentially trade throughout the week, I usually look at the daily time frame, the 4-hour time frame, or the weekly time frame. I don't look at any of the smaller time frames because I'm looking for the overall broader analysis on the stock, not a day-to-day analysis. And you can see here on NVIDIA has been holding. So this is a 50-day EMA and it's a 30-day EMA. It bounced nicely right off of that 190 level here, and as well as that 50-day EMA. So it's kind of holding that EMA as a trend line. Has a little bit of a, if you zoom out, has a little bit of a double bottom here, and it has bounced off of that 50-day EMA. NVIDIA, with news of its ARMS acquisition, earnings, that it did really well with its earnings. This could be a momentum for NVIDIA to push past all-time highs. Its all-time high is 208.75. I do have a price target of 220 on NVIDIA 2 weeks out. So depending on overall market sentiment, I do want to see NVIDIA break all-time highs and potentially move up to 210 and 220. Those are my 2 price targets on NVIDIA. So we'll be watching this this week. To trade it, you can scalp it. I would scalp it above 208.75, which is the all-time high. And then every dollar is usually a price target on NVIDIA. Ultimate price target is maybe 210 and 220 levels 2 weeks out. On the downside, I don't really like it too much unless overall market is selling off, but I really like this to the upside. I think this has good potential on it.
Yeah, looks like it's due for a green leg up for sure.
Yeah, for sure. It had a nice pullback on it, held its trend lines, and even if you set a overall trend line on it, it has been holding.
It's holding.
So yeah, so we'll see. This could be a good play. Next play I have is BA. So the only reason I like BA, there's a couple of reasons. One, there's global news. So some of you may or may not know there's a lot of issues going on in the Middle East um, with them pulling troops out and putting troops back in. So whenever there's issues in regards to war or anything like that, there's a lot of stocks that obviously are going to benefit from them. BA is one of them. So I decided to look at BA's chart, and BA held this 210 level really well end of day Friday. It did reject the 240 resistance level that I had. Nice rejection there for puts, but now it's holding this 210 level. What I'm looking for BA is for a bounce off of this 210 level. I want to see it hold 210 into open tomorrow. And then I'm looking for a bounce back up to 220 is going to be my first level of resistance, and then 225, and then potentially back up to 240. So I do like BA on this bounce only if it holds above this 210 level into open tomorrow. We can get a nice bounce back up on BA. So this is another one that I'm watching based off of, global and economic catalysts behind it. So
And do
good
you
one here.
scale out of your contracts based on those resistance levels?
So yeah, it depends on the trade that I take. Sometimes I do scale out, sometimes I'm all in, all out. However, if I do see
Okay.
that stock has momentum, then yes, I'll scale in and scale out instead of going all out and all in. Because if the stock does have momentum behind it, you don't want to let go of all your contracts all at once. You want to catch the entire move.
Right, right.
And then the other one that I really like, also a catalyst play here, is Microsoft. So Microsoft on Friday or Thursday announced that they are um, increasing the price of their Microsoft 365. Um, and this one, what I really liked about Microsoft is on Friday, even though the market was choppy and kind of pulled back, Microsoft was just killing it. So it made all-time highs on Friday. It's currently at all-time highs. I do also like Microsoft's um, options chain as well. So it does have a lot of open interest and volume on some of these strike prices, especially these psychological levels. So I do have a 310 and 315 target on this. If it holds and if it opens above 305, we can see Microsoft's hit 310 into this week. So this is also a good play. It might pull back tomorrow because has made a huge move up. And
Right.
usually Microsoft doesn't move in huge increments. It does move in smaller increments on a day-to-day basis. So we could see a slight pullback. However, overall trend of Microsoft, I do like it to that 310 level.
Perfect. Perfect. So we've got NVIDIA, we've got Boeing, and we've got Microsoft. That's on your watch list for Monday.
Yes.
Perfect. All right, guys, we are going to move on to some questions from the chat. I know we've seen some early on. We're going to get maybe 2 or 3 of them in. If you have any other ones, send them our way. Let's see what we have got here. I do have a question from Manal. I find it. She asked, if you had to suggest 3 resources for somebody who is completely new to options and wanted to learn, what would you recommend?
Okay, hold on. I have this book that I really like. Let me just make sure I give you the right name. So I like reading books. I think they're the most helpful, and then using that information and applying it to what you've read. So it's called Understanding Options by
Okay.
Michael Sincere. I think that is the most basic, easy to read book about options. And I recommend that to everyone if you really want to get started into options. So read that book. That is like my holy grail about options. You can learn all of the basics in one book, and it's not a hard read. It's very small, so definitely recommend that. And then honestly, like, invest your time into just practicing the charts and back testing, paper trading. That's the only way you're going to learn options. And I know you've mentioned it as well. It's really just trial and error. And if you're not understanding the basics and applying that, you're not really going to be able to learn. So read that book, practice. Don't just read and retain information and not apply that information. If you're not applying it, you're not going to learn anything from it. And then there's a lot of information on YouTube, a lot of options information on YouTube. You do need to kind of filter out all of the BS and kind of find some good options traders on there and watch their YouTube videos. There's a lot of informational videos out there for you to learn. And it's just do your own research. You don't need to, I didn't take a course and do anything. I did it based off of my own research, trial and error, and reading books. So
And there is, Manal, I'll actually send this to you and I can post it for you guys as well. There is one YouTube video specifically. It's like 3.5 hours long. I'm honestly only even halfway through it because I've been watching in like little pieces to digest it. but I've never seen someone break down options more basically and with repetition in a way that helps me. So I will send you that link because I thought that was great as well. Um, One other thing for me that's actually been working is if you have a friend that is very options literate, like when I've been doing my trial and errors, like I'll take a play and I have a friend, Chris, who all he trades is options. I'll sometimes send it to him. He'll like give me tough love. He'll kind of scold me on it. Like, no, you didn't look at the theta on this, or no, I told you not
Yeah.
to buy calls when it's green. I told you not to do this. And have somebody kind of back off and be like, okay, this is why this was a good trade. This is why this wasn't, is really helpful because there's so many moving parts that sometimes for me when
You
I'm
don't
so
see.
new at it, I don't know why this
Yeah.
wasn't a good trade.
Yeah, yeah. I think it's
Um,
always great to bounce ideas off of different people, especially people who are more
100%.
experienced than you. Yeah.
100%. We do have another good question about how do you know when you need to get out? Like when do you need to take profits? When do you need to accept the loss and move forward?
So I always have a set price target for a profit and a stop loss. So those are the main things that you have to make sure you always set prior to even entering the trade. You need to make sure you have a where am I going to take profits? So say for example, you take a trade, and I just want to share the chart really quick because this is actually a good
Sure.
example of Tesla. I think it was on Friday. Let's see if it shows up. So if you, for example, want to take a trade and you have your entry point on the trade, but you don't know where you want to take profit, you're going to end up taking a loss because you're going to get greedy. And I've seen this happen with a lot of people. They don't have you know, where they're going to
Mm-hmm.
take profit, when they're going to take loss, and they end up getting greedy. So here on Tesla, this is perfect. So I don't have levels set here, but I'm just going to set a couple levels that I remember right here. And right here is a level. Okay, so and I took this trade on Tesla. So say for example, you're going to take the pre-market high break of 675. If I take the 675 break, my target is going to be my next level of resistance. And my next level of resistance is the 678. Then my second target is going to be my next level of resistance, 685, and so on and so forth. Those are going to be my profit targets. Usually when I'm scalping, I take profit at the first target that I have set. If I do see momentum based off of, other factors, level 2 volume, I'll continue to stay in and scale out. However, if I don't see any of that supporting the move, I will get out on my first profit target. If you do not have profit targets set, and I've seen this happen with a lot of traders, you'll end up taking a loss or you end up giving your profit back because look at what happens. Stock pulls back. And what's going to happen is you're going to get out on the bottom of this pullback if you don't have
I
a
mean,
stop loss.
I have been there just through trading
Yeah.
commons many, 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 many times. Like if you don't go in with a plan and stick to it, because sometimes I'll say, I a lot of times actually like to put my sell orders in ahead of time because that way there's
Mhm.
sort of a commitment to, I'm not going to watch the chart and see that the stock is going up and negotiate my profit area with myself, because what happens is it starts going up. It's the whole staircase up, elevator down thing, right?
Yeah. Hmm.
And then as the stock's going down, I suddenly have a green trade that I now let go red, and suddenly I'm selling for a loss.
Yeah. Yeah.
And
That's all too familiar with a lot of traders. And I think that's what people struggle with is because they don't have price target set. They don't know where they're going to get out. They only have an entry point. They have no exit plan.
mhm. um, yeah, and I think a lot of people too, there's a trader who says this all the time, but like people go into trades saying, I want to make this much, but they
Yeah.
don't assess how much they're also going to like be open to losing. And
Yeah.
you have to be aware of
Have
both
both
of those
sides.
things.
Yeah, exactly.
I do have a couple other questions that we want to get through real quick before we wrap up. This is a great one from Zero. Are options good all year round, or is there a time of year where it's better or safer to experiment?
So I would say that there you can trade them all year round. However, I have found that the beginning of the year, um, overall market sentiment is a little bit better in the beginning of the year anyways, so options are a little bit less volatile in the beginning of the year. Also, no earnings has come out, nothing has come out in the stocks. There's not a lot of volatility behind most stocks, so I would say the beginning of the year, if you want to start, learning options and start getting your feet wet, that's what I would recommend. However, you can trade them all year round. We talked about this earlier. It just really depends on market sentiment, because right now it's not a good time to just even learn about trading in general. Now's the time to just gain knowledge, learn as much as you can, learn as much as you can, and not really put money out there yet, but just learn and learn until the market presents an opportunity.
Awesome. Let's get maybe just one or two more quick questions in here. What are your top 3 indicators?
Okay, so VWAP. The VWAP is an intraday indicator, and I can show you guys on the chart too. I have it set up here. So these are the studies that I have. I only have 4 studies on my chart for day trading. This is the VWAP. I only have the middle band set. So I have the VWAP, I have the volume average indicator, which shows you overall volume on the stock's move. And then I have my 21-day EMA and my 9-day EMAs. These are my 4 indicators that I use on a day-to-day basis. I don't use any other indicators. And they're very helpful for support resistance levels, for the overall trend of the stock, and then obviously volume to how significant the breakout or bounce on that stock could be.
Mm-hmm. So you keep it super simple. You don't, because you know how some charts are just overwhelming. There's so much going on.
Yeah.
You like to keep it simple.
Yeah, and I used to be one of those traders. That's why I've kind of learned the more simple your chart is, you really, really want to focus more on price action versus indicators, because all indicators are derived from the price action of the stock. So that comes first.
Mm-hmm. And then in regards to scaling out, do you take, like, how do you scale out, in what increments? Do you do like 25% first and then a 50% chunk and then 25%? Like, what is the way that you break out when you scale out of the play?
Okay, so when I scale out, so say for example, I have 10 contracts or I have 5 contracts. Say for example, I have 5 contracts. Usually I like to get out 50% of my capital. So if I have 5 contracts, I'll get out 3. Okay, so I'll get out 3 contracts and I'll let 2 just run its course or go to my next price target. Usually that's how I do it. I take the biggest chunk of that profit and I lock it in, and then I let the rest of it run. So if I have, say for example, 10, I'll lock 5 in my first profit target, another 3 in my next profit target, or all the rest of the 5 in my next profit target. It really just depends on what the market is showing me. However, 50%, 50 to 75% is what you should be locking at your first profit target when you're scaling it out.
I love that, because I sometimes would do the opposite. Like, my initial scale outs would be a much smaller percentage of what I'm holding. And I almost always realize it should have been the polar opposite.
Yeah. Yeah.
Okay, we're going to get just one more quick question in and then wrap this up. This has been amazing. What is your go-to time frame when you're scalping options, or day,
5
or whatever, your 5 minute?
So when I'm scalping, I pay attention to the 1 minute, but it's very shaky. And I think a lot of people who only pay attention to the 1 minute get shaken out of trades. So my 5 minute for scalping is my go-to. And I think it's the
There's a
most
lot of
solid.
noise, right,
Yeah,
with a
there's a
1
lot
minute
of noise
chart.
on the 1 minute. Yeah. And I've seen so many people, and myself as well, I get shaken out of those little 1 minute candles, but on the 5 minute shows you a much cleaner look of what the stock is doing.
I love it. Awesome. Well, thank you so much for coming on as a guest. I know, especially me being new in my options journey, I've already learned so much from your YouTube videos. So guys, if you're tuned in and you're a little bit intimidated about options, you don't know where to begin, Masi's videos have been great at breaking down some of the basics, and we've learned a lot from you today as well. So
Thank
thank
you so
you.
much. Thank you for having me. Hope you guys
Thanks
enjoyed.
for coming on. Absolutely. All right, y'all. Let's go ahead and hit the like button. Let's show Masi some love. If you guys want to go ahead and give her a follow, it's at MasiTrades. I want to thank you guys for the awesome questions and comments. I do want to touch on something really quick. Solar Up says Cardano closed another hourly candle at a new all-time high. That's exciting. I've been watching ADA. I think yesterday we hit like 158 or 160. 5 maybe. I don't really remember, but yeah, I'm excited to log off after this and go see what crypto's doing. Or is it in the twos? I'm distracted right now. But Cardano is one of my top watches, and it has been doing really, really well. So I'm excited to see where we go from there, and if we can get crypto and Bitcoin to continue rallying. This has been a great show. If you guys liked what you saw with Mossy, know that I have a new guest on every single week, and we get to learn from their unique insights and wisdom. And it is always just a blast getting to know what other people do and picking up, some fresh insights from them. So thank you for tuning in. Hit the like button. If there's anything that you want to see on the next few episodes, just leave a comment for me and we'll make sure to get those addressed. All right. See y'all next time.